You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 12th day of December, 2019. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at CFRN.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. On the days you're out of the office, away from the desktop, not to worry, point any internet-connected browser to cfrn.net/live. There you'll find a live, real-time simulcast of the show as it unfolds, brought to you by the good folks at YouTube. Thanks, YouTube. I need to tune that up. All right. Well, what a day. What a day. What a day for a tweet, right? Man, the president, we talked yesterday about the grand illusion that this whole impeachment business is. And, you know, the key to a good illusion, of course, is the distraction. You got to get the audience's attention somewhere else so that you can do your sleight of hand, whatever that might be. Well, he one-upped him again this morning with that tweet. Now, what did he really say? He said we're really close. We all know we're trying to get this trade deal going with China. That's not news. And we're certainly, I would think, just based on the calendar, we're closer today than we were yesterday. Not as close as we'll be tomorrow, as long as both parties continue towards a common goal. So, I am enjoying this. I had a co-host at one point in time that used to talk about how much he enjoyed Bill Clinton's presidency. I wasn't sure what he meant by that. But I am really enjoying this presidency. Oh my goodness. Every day's an adventure. But enough of that. Let me put up a chart. That's why we're all here. Take a look at these markets and let's see what's really going on. Let's go with a daily chart. Let's go with, we'll talk about that in a second. First we'll talk about this. Okay, here we go. This is a daily chart. S&P 500 Emini Futures. What we're looking at are Fibonacci price extensions. I've gone into great detail over the last couple days, so if you're a regular, then I'm sure you understand the concept by now. And if you're not a regular, if you're here for the first time, welcome. Glad to have you with us. Go to YouTube. After this show, go to youtube.com/CFRN, and you can watch yesterday's show or the day before. There's years of shows to be watched, but in particular, the last couple days, I have talked quite a bit about the extensions, because once you're at an all-time historic high, retracements and extensions kind of carry the same weight, maybe even more so, because this is rarefied air up here. Okay, where the S&P 500 went this morning, 3177.50. Price has never been there before. Now, we know that important prices, important areas are almost always tested. We talk about that every day. We also talk about the ability to know what the next high probability move is in the market based on both past price behavior and current price behavior. The Fibonacci price extension that we're looking at here, we put in a swing low on October the 3rd. Before today, the all-time historic high in the S&P 500 was put in on December 2nd. That intraday high was, and I should point out that's intraday, the intraday high was 3158, and again today 3177.50. And I don't believe there's any talking head out there anywhere, myself included, I guess, who isn't blaming this move on the president's tweet this morning. And if you didn't see the tweet, let's just take a look at it for a moment. I've got it right here. Maybe it's right here. Here we go. Okay. Here it comes. Wake up, Opera. This is the Opera browser. If you've never used it, I use it every day here on the show. And on the back burner, I have been for quite a long time. I'm developing a browser, a custom browser, just for CFRN traders. Got a lot of projects. The back burner's pretty crowded. Someday it'll get complete, but in the meantime, you can use the Opera browser. Just Google it, and you can download it for free. Okay. Well, I'm not exactly sure why this. I must have clicked something somewhere. Do you remember? While we're here, might as well just talk about it for a second. Anybody out there remember Google Plus? Google took a run at Facebook, and they built a online community. Well, everybody's familiar with Facebook. We built. Now, this says 24 members, private. At one point, we had, I think, I know it was over 1,000. Might have been, I don't know if it ever reached a couple thousand or not. It's, all the content is still there. But unless you are able to log in to Google with the appropriate identification, blah, blah. See, this was once all open to the public. Now you got to have a CFRN email address. You have to log in to Google, Chrome, etc. So, why, I ask, why did they take it down? We had so much content, and we still do. It's still there. But it all got wiped away. And you can build a new community, but it's only available to somebody that has that domain's email. So that's way more information than anybody needs. So let me just go to that presidential tweet and get moving. All right, President Trump. Let's just, there he is. Here we go. This is what set the market on fire this morning. Getting very close to a big deal with China. They want it, and so do we. Someday I'm going to figure this whole Twitter thing out. I've got a pretty good handle on Facebook. I've been using Twitter since 2008. But they've reformatted it. John's a real big fan. Anyway, all right. So you saw the tweet. Now, this doesn't look so dramatic because it's a daily chart. We've discussed last couple days that the next Fibonacci price target overhead, you can call it a target, you can call it an obstacle. It's basically 3180/85. Okay, we made a good run at it today, 77.5. That's where we are on the daily chart. Okay, today's Thursday, so it's Dr. Tom Day, and we're going to try to squeeze John in as well. So let me just give you the numbers real quick from around the world. These are the cash markets. Do have a little bit of news for you, and I want to share that. It has to do with China and cryptocurrency, and, well, a sneak preview. China's Bitcoin miners now control 66% of the global hash rate. And somebody said, well, is that what he's smoking? No, I haven't seen any hash in a long time. I don't even know if that's a thing anymore. Now that it's legal everywhere. Well, it probably is. I guess it's legal now. So what is the hash rate? What does that mean? The hash rate, let me give you a clinical definition. The hash rate is a measure referring to the overall computing power involved in validating transactions on the Bitcoin blockchain. More power suggests greater network security, as well as interest in the profitability of mining Bitcoin. According to the report, the Chinese share of hash rate has surged from 60% in June of this year and is the highest recorded by CoinShares since the firm started monitoring this measure in 2016. The Sichuan province reportedly accounts for over 50% of the global hash rate. Not just 50% of China's 66% share, but 50% of the global rate. Now, this spike could be caused by using more sophisticated mining hardware. There's a lot of chatter. If you have an interest in cryptocurrency, if you don't want your children to have to learn Mandarin at some point, it's probably a good idea that they learn. I think kids should be bilingual. Here in Phoenix, it's kind of difficult to get through the day without speaking a little Spanish, but somehow I manage because I don't speak any. But that thump, thump, thump that you hear in the distance, that's jackboots on a grinder somewhere. Now, are we talking world domination? Well, I don't know that we are, but they are. What this figure reflects is just how seriously China is taking this whole crypto business. Yesterday, we had a special edition of the show. We talked with one of our longtime partners, Tony. She was kind enough to come and share what she knows about this entity, this company, this thing, and it is a thing called Carrot Bars International out of Stuttgart, Germany. They have a cryptocurrency, KBC, that is backed by real physical gold. I promised not to say game changer during today's show. You know what? I'll even hold off on paradigm shift, okay? I think we wore that out yesterday. Let me just say that if you didn't catch yesterday's show, watch it. Make sure you listen very carefully to the disclaimer parts. Then go out on the internet, do some Googling, and read some of the accusations of fraud and mismanagement, and they really don't have any gold. That's part of your due diligence, okay? I'm sure somebody in the audience yesterday said, oh my God, Dwayne doesn't know. Yeah, I know, and I've investigated, and I've heard the statements issued, or read the statements issued by the company, by the CEO. Hey, how long ago was everybody screaming about Bitcoin being all of those things and more? In fact, the bad boy of banking, Jamie Dimon, on national TV, took to the streets. He literally took to the streets, held a press conference, and said Bitcoin is a fraud. He issued that statement while his employees, the ones he said he would fire if he ever caught one of them trading Bitcoin, as he spoke, the markets tanked, because when Jamie Dimon speaks, it's kind of like Merrill Lynch. People listen. The Bitcoin market tanked that day. All cryptos did. Jamie and his bad boys, they bought the dip. Now, that's not a conspiracy theory. That's a documented fact. These Teflon guys that are able to get away with some of the stuff that they do, well, a lot of it has to do with money. I spoke about Kramer, and I know Kramer's a big hero to some people. I mentioned him in a post this morning. And you know what? Some afternoons when I'm at my desk working and Mad Money comes on, I often click over for the entertainment value, because that's all I get from it. It's just entertainment, watching him roll up his sleeves and honk the horns and do all the stuff that he does. He's quite a character. He really is. He leans pretty far to the left. If you didn't hear the interview this morning, or his comments regarding, what's his name, Steve Bannon. Steve Bannon made some pretty biting comments about Cramer, I think it was yesterday. So Cramer issued his rebuttal. If you didn't hear it, I'm sure you will. It's going to get a lot of airplay. Yeah, but enough of all that. Numbers, they say, give us the numbers. Here they are. Currently, right now, the Dow is up 70 points. NASDAQ is up 8. S&P 500 is up 10. And the Russell 2000 is up 8. In the commodity basket, crude oil up 65 cents, trading 59.41 last. That's a gain of 1.11%. Gold down 90 cents, trading 14.7410 last. And in the Asian markets at the close, Nikkei posted a loss of 32 points. I'm sorry, the Nikkei posted a gain of 32. The Shanghai posted a gain of, Shanghai lost 8. Hang Seng added 348. That's really the only mover or shaker that I see. That's a gain for the Hang Seng of over 1.25%. And in European markets at the close, FTSE was up 57, the DAX was up 74, and the CAC was up 23. That gives us a mixed day in Asia, a green day in the UK. So far, it is a big green Radio Thursday here in the US of A. Let's go to Michael, get a recap of what happened in the live training room. I'll be back. We'll do some recaps, talk to John, and again, today being Thursday, Dr. Tom Day. Michael, take it away.
Okay. Here, let me flip it over to my screen. Put my glasses on. All right. Right now, everybody should be looking at my screen. And
we got you locked and loaded.
Excellent. All right. Okay. If you have not taken the free trial, to take the free trial, all you need to do is go to the home page at CFRN.net. In the right-hand column, it says 5-day free trial. Apply.cfrn.net. If you click on that button, you will be brought to... Oh, crap. I forgot. That doesn't work on my computer for whatever reason. It's going to be a cookie thing. Let me just go back home here. If you click on that, then... Hang on. I got to get an incognito window and click on that. If you click on that, you'll be brought to this page, eminitrainingschool.com, where all we ask for is your name, your email, your phone number. You hit register now, you'll be sent a confirmation link. Now you can go directly to eminitrainingschool.com if you want to, but when you hit register now, you'll be sent a confirmation link. You must click on the confirmation link, okay? If you don't click the confirmation link, we don't know that you took the free trial, okay? Okay. The spreadsheet. Well, we had another green day today. That's good news. And tomorrow is going to be Friday the 13th of December. Today is the 12th day of December 2019. Today we lost 5 ticks in crude. We made 10 ticks in gold. And we made 2 ticks on the ES. That put us up $75 on the morning session. Today it took 20 minutes and 3 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 5 trades. So on the month now, we're up $827. That's over 9 days, averaging only $91 per day so far. We'll get that number up. Okay, on the year, we're at 34,662. That's over 226 days, averaging $153 per day. $153 per day. Now, we'll go over what did and or didn't happen today. Okay, we'll start out with gold. this was when Trump's tweet came through. But we started out up here. I didn't get filled on that. Then the slingshot wasn't letting us take any trades in here. Okay. The next spot would have been right there. And then Trump's tweet came through, and the market just tanked. The slingshot wasn't letting us in it, but it was moving really fast anyway. Then right here, we picked up 10 ticks. Here we had a break even. We missed a long right there. That would have been a break even. Let's see, we missed another long over here. And we missed a short right there toward the end of the session. We've got one more break even. And then during the break, it really wasn't giving anything up during the break. It's got a potential long building right now. Okay, potential long trade. All right. Okay, on the euro, we had just the one trade right here that we got a break even on. It looks like there was another opportunity right there, but it depends on whether it was going into the low of the day or not. See, because I think it was, and that's why I left it alone. Then it pulled back up, didn't give anything on the long side, pulled back up. Now, I didn't want to do this one. I didn't want to do this one because of the location of the cycle. Okay, I prefer it to be, down here, but we didn't have a whole bunch of divergence there either. Okay, so that's something to consider. And there was nothing else during the break. Nothing else during the break. Okay, now crude oil. Yeah, crude moved around a lot with the Trump tweet as well. See, crude went up, the ES went up, gold went down, and the euro went down. But on crude, right in here, was a long opportunity. Okay, then it pulled back, and we really didn't get a short right here. Given that we had all this bearish separation, we really didn't get a short opportunity in there. Then we finally did get a short opportunity back here, and it stopped me out. And then I picked up, what did I get there? 2 ticks on that long trade, and 1 tick on this one to put me at -5 on the morning session. Okay, and I'm pretty sure that's all we did with crude this morning. Come on. Okay, now during the break, let's see. No, I wouldn't have done anything with that or that. The only opportunity that was really there during the break was right here. Okay, and then it was followed up by this one right now. And that was crude today. We're -5 on crude. Okay, now the ES. We missed a few trades here on the ES. Okay, I didn't want to do this because it was too close to the weekly trading zone. I don't like trading when it's right next to the zone like that. But hold on, let me scroll back here. See, we picked up 2 ticks right there on that one. And there was one more that we did. We're going to break even. We can see right here, when this was going up, gold was dropping. And that was all based on the Trump tweet. Okay. Hold on, I'm scrolling back. I'm trying to, anyway. Yeah, we had a break even here. We had the break even there. Then we wanted to make sure we had a trend. We had to break dynamic resistance. We finally did. So there was a long trade right there, followed up by another one right there. And that was followed up by another one right here. And then, as I said, we got 2 ticks out of that. In the weekly trading zone right here. Microsoft was kind enough to reboot my computer last night for me. And it ruined all the stuff that I had going on. And I had all kinds of problems this morning starting back up. There was a long here that I didn't want to do because we were trading so close to the weekly trading zones. And there was a short here and a short here, both of which would have been good. And now during the break, let's see. Looks like there was a short right here. That would have worked out just fine. And a long right here. That would have been a break even. And another short right over here. That would have worked out just fine. Okay, and just recently there was a long from right here for that move up. Okay, and that was the morning session. So let's go back here to begin with. This is eminitrainingschool.com. If you want, you can go directly to eminitrainingschool.com to sign up for the free trial, or you can go here to CFRN.net, and in the right-hand column, it says apply.cfrn.net. If you click on that, you will be brought to eminitrainingschool.com, where all we ask for is your name, your email, and your phone number. You hit register now, and you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial. Okay, so that's that one. Now let's bring up this one. Okay. Today, as I said, is the 12th day of December, 2019. Today we lost 5 ticks in crude, made 10 ticks. In gold, made 2 ticks on the ES. That put me at plus 75 on the day. Today it took 20 minutes and 3 trades to get to the goal for the day. At that point, we were up $100 a contract, and we took a total of 5 trades. Okay. That ended up putting us up $75 on the morning. On the month now, we're up $827. That's over 9 days. And on the year, we are at $34,662. That's over 226 days, averaging 153 per day. 153 per day. Okay. And that's it. With that, we can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready. Dwayne must not be ready. Okay, well, you can look at the ES here. See, we have nice bullish separation down there. We had nice bullish separation. And what you would be looking for is this right here. Okay, close up above right there. Okay, I think Dwayne is back.
Yes, sir, I am, and my apologies to you and the audience. I
Okay.
won't make any excuses. I'll just extend my apologies and grab the charts. Recap of the recap.
Today it took 20 minutes and 3 trades to get to $100 per contract.
That, my friend's a good bingo.
Bingo.
Okie doke. All right, let's jump straight away. Any other news? Anything we need to talk about real quick before I dive into the recap here?
No. We have a partners meeting tonight, and Bert's got a meeting this afternoon.
Oh, yeah. Anyone who's on the trial, or maybe you took the trial in the past, and somehow you never quite connected all the dots, if you go to that webinar this afternoon, and to do that, just check with, if you need the link, check with Valerie on 949-42-EMINI, or email support@cfrn.net, or check the chat box. I'm sure she'll post a link here for us if you have access to the chat box. Those of you that log in through cfrn.net/live or youtube.com/cfrn/live. I haven't been monitoring those chats in the past, and then I was, and then I wasn't again, but I'm setting something up so that in fact I will be able to monitor them all effectively and efficiently, because we don't ever want any questions to go unanswered, because that's how we roll. All right, let's go to a 30-minute chart. Now I guess we can start with this. One alert for triggers. Yesterday during the recap, we highlighted a alert. Here, let me give you this so you can grab a screenshot if you want to. Okay, 2:40 a.m. Eastern. Oops. Yeah, it happens. Better late than never. I try to get them out every night, folks. 6 p.m. Somewhere between 6 p.m. and 9 p.m. Eastern. I would say better than 80% of the time I managed to do that. Last night, a little late, but there they were. And then this one alert for trigger business, that came off of the Tuesday night alerts. Consider being long, 3140. I have updated the zones on the S&P. I don't think I've got these charts updated on the other markets. Maybe we can do that as time permits as we roll along here. Of course, partners and passport holders get the zones, the fresh weekly zones, every Monday morning, 6:15 a.m. Eastern. And then I share them with the entire CFRN universe on Thursdays in hopes that you'll jot them down, because they just might help you the rest of today, tonight, tomorrow, Sunday night, and into early next week. Okay. We had an alert that you just saw, 3140. First trigger, 3.5 points. Second trigger, 3 points. Third trigger, 4.5 points. And then the final trigger, 7 3/4. But then I haven't connected these dots yet, so I'm just going to do that. Now, this is important because something that you'll hear here that I don't think you hear elsewhere, but maybe. Important prices, important areas are almost always tested. The alerts that we put out, I arrive at those numbers. Of course, it's a proprietary method, but I think it's different than the other proprietary methods that you see out there because of what you're looking at right here. This is one of the identifying factors. One alert, trigger, trigger, trigger. 1, 2, 3. Oh, right there's number 4. That's where the 7.75 belongs, right there. But then this morning, I guess I could officially change that, make it a 5. There we go. Alert 5 triggers. Okay. And this one, well, we all know what happened there. Last night's Concierge Trade Alert for the S&P, I had a bit of a typo. And let me show you. I've already corrected it here, but those of you that originally saw it, it said 31501. That's the longhand version of 3151. So this is the correct number. I think everybody figured that out. Now, from 3151, with a little help from the president, price put in a swing high up at 77.5. The trade to target, the initial trade to target from 3151 is 3156. It's a 5-point move $50 a point, $250 per contract traded. Price sailed through that zone like it wasn't even there. When that happens, we have a name for that. When price reaches a weekly trading zone, only three things can happen. The most likely is consolidation. The second most likely is rejection. The third and least likely, but it does happen as you can see, that's called the slice. Price slices through when the move runs out of steam. The high probability thing to happen next. In this case, you can see that it failed to be the good resistance that we would expect. So the question becomes, all right, are you willing to be good support? Price came back to where we sliced. And as you can see so far, on this pullback, we are holding steady here at the 56/57 weekly trading zone. I believe I mentioned important prices, important areas are almost always tested. So on this candle right here, the swing low was 31.50 and a quarter. So we did two things on the pullback. We came back to the zone we sliced through, and we are confirming it as good support as we speak. But price, it's almost like maybe you have, or maybe, and I'm not making light of this at all, maybe you have or know someone who has some type of a compulsive, they call it a disorder, but sometimes the market, it appears to have a need, some kind of something that causes it to do things that you wouldn't typically expect. It just kind of look a little bit odd, maybe a little strange. Okay, well, however you label it, and if you ever truly figure it out, give me a call. You can call collect. I'll accept the charges because I'd like to know too. So what do? We dip below the trigger by how many ticks? 3. So we dip below the trigger. We need to dip below at least 1 tick for it to qualify as a re-trigger. And so on the second trigger, we've made it back up to 31.60. So that's 9 points on the second trigger. The first trigger from 51, well, to 71. That's 20 points at $50 a point. That's $1,000 per contract traded. This 31.73 that you see here, we have a Logic 247 alert that we're waiting for it to trigger. I originally posted this morning that everyone should watch 69/70 because that looked like a spot for good support, not taking into consideration that we kind of needed to resolve this issue. But see, the market always works. The market is always right. So anytime you find yourself, backed into a corner and you're not sure what's going on, why things aren't coming together the way you thought they might, go look at the market. Stop looking at your indicators, your oscillators, put the PDF away, turn off TV, and stop listening to that joker on the internet, and go look at the market, because that's where the answers are. Okay? All right. So we see that this worked out quite well. This bells for all of our traders that participated in this alert. Now, before I move on to the Dow, I know that the S&P is like the favorite. It's the market that everybody who becomes a futures trader wants to trade. And if you ask why, most folks don't have an answer, because everyone thinks that that's supposed to be the answer. If you say, hey, what market do you want to learn how to trade? It's almost always the S&P. And in mentoring sessions, I always go why, and then there's silence, and then we talk about it. Okay, there's nothing wrong with trading it. It's certainly the most liquid day or night, 2 a.m. or 2 p.m. If you want to get in or out of a trade, there's always somebody willing to take the other side of that trade. Now, those of you who have experience trading equities, you know what it's like to be in a position and not be able to get out because nobody wants to take the other side of that trade. Now, there are other futures markets that are plenty liquid for someone who is just learning how to trade, and most traders in general. Plenty of liquidity in the Dow, Russell, NQ, and then there's also gold and there's crude. All of the markets, these are the markets that we watch the most. Crude, Dow, Russell, ES, gold, crude, NQ. Okay, we also look at bonds. We don't have a lot of bond traders, and we also do alerts on soybeans, and we don't have a lot of bean traders. So I usually don't even bring up those alerts, although I give you the screenshot if you want it. And I don't know if I left this up long enough for you to grab a screenshot, but if you want one, there it is. Okay, got that? Okay. Okay, let's go to the Dow. On the Dow. There we go. On the Dow, the alert said, consider being long 27,965. 27,965. Now that triggered back here. Over here, this 3173, that has targets overhead, right there and right there. This has not triggered yet. In fact, if John pops in while he's talking, I'll probably be issuing another alert, an official alert. In fact, we can do that. We can do that right here, right now. Okay, what does all that mean? I'll explain it. Okay. The alert is to consider being long the S&P 500 Emini Futures December contract, which, by the way, we're going to roll that thing tonight. If you see me put out alerts tonight, Concierge or Logic, and it's not, if it's still the December contract, please call my attention to it, because that means I forgot. Yeah, I've made a note to remember, but now I've got to remember to look at the note. Okay, so consider being long 3164, initial target 3166. The trade to target is always on along the weekly trading zone above. In this case, that's 3169/70. Our highest weekly trading zone for this week is 3220/21. Okay. What did I do? Oh, I know what I did. I'll fix it. Is it 2021? Yeah. Yeah, it is. Okay. There. Now we're good to go all the way through the end of the week. These numbers will, of course, still be valid, and we'll be using these numbers Sunday night on the Globex Open. Why this number? Book a mentoring session. I'll go over it with you. Okay. So consider long S&P 3164 to 3166 to 3169, and then trail if possible to the weekly trading zone above, and that is the highest zone for the week. Hey Michael, do we have any big news out tomorrow morning?
Let me go look.
Thank you.
I
I'm not
think-
sure. It seems like I remember somebody.
Yeah, core
saying
retail
something.
sales and retail sales. Those are the big ones.
Okay, no job stuff, huh?
That was today.
Oh, that was today. Okay, gotcha. And how did that number come out? What was it like?
Lower than expected. Lower than expected. Well, unemployment claims is what came out today. And that actually came out higher than expected. So
Okay.
what I mean is we had fewer jobs. But the other unemployment stuff, or employment stuff,
Mhm.
I should say. Let me go see. I think that came out last week. And yeah, non-farm employment change. And the unemployment rate dropped to 3.5%. Non-farm employment change was, and that's a big difference. It was plus 266, and they were expecting 181.
Wow.
Yeah, so that was a huge difference.
Yeah.
But yeah,
Okay, that looks like John ringing in. So here's what we're going to do, guys. Going to open John's mic. We're going to talk with John. Dr. Tom will be here in about 6 minutes. And then after we talk to Dr. Tom, I will complete the recap. We'll go through every one of these markets, every one of the alerts that were given to all of our traders last night. And you'll notice on the Dow, that obsessive compulsive thing I mentioned, see how price, it got, how many ticks? The low was 68. Oh, wait, did it not go below? The swing low was 27968. Oh, I don't have the line in the right place. That's the problem. 27965. It didn't make it. Or did it? Hang on. Nope. We missed the second trigger by 3 ticks. Okay. Well, here's the first trigger. Second trigger. We missed the third trigger. John, welcome to the show. Glad to have you with us.
Thanks. Great to be here. That was a pretty cool trade.
Yeah, you know, the president lended sometimes he'll just lend a hand when we need him, and there it is. That tweet of his.
Yeah, it's
just set the
actually
market
very
on fire.
volatile. There's a lot of stuff that are kind of, you know, it's this. We've been looking at Roku and Intercept, and the Madrigal got a haircut a couple of days ago. Remember, we looked at it and it was still going up, and then next thing you know, bang, gets hit. And then today we got hit on Intercept again from 120 down to about 114. You know, on a strong day like today. And then
ICPT.
yeah.
Okay, that's Intercept. Okay. Now that's on a monthly. Let's bring it down to a daily.
Probably need to look at a intraday because it's.
Oh, you want to look at intraday? Okay, here's 30 minutes.
Yeah, look at that. See that? I was kind of expecting that to happen. So.
Okay. So let's see. We're on 30 minute. Do I have my? I don't have my time set right. I need to be New York time. There we go. Okay. All right, so the opening candle this morning.
It was at, I think it was right up there, the reversal.
Yeah,
Something's on.
right there, that big wick. Okay. So we opened.
No, that was yesterday. That was yesterday, Dwayne. Today,
I
we
show
actually
that
sold
being
it.
the 9:30 candle, John. Is that not right?
I
sold
think there's
off.
something wrong. Yeah, we sold off right from the opening today.
Yeah, we sold off, but then we recovered before
No,
the
that
30
was
minutes was
yesterday.
up.
That was yesterday.
Okay. All right. Fair enough.
Yeah. I'm pretty sure. Yeah, just a second.
I'll break it down to a 5-minute, and
Yeah.
and we can look. Either way, we can see where price is right now. So 9:30 this morning. 9:30.
Yeah, we just went up a little bit this
we
morning.
popped
that's
up a
all.
little bit, right?
Yeah, and then it
sold
kind of fell
off.
apart.
So now let's go back to that 30-minute. There is something off on the chart.
Yeah. Yeah, that first bar I think was the opening range, and then it's kind of sold off.
Oh.
That first green bar.
No,
that
the
green
chart
bar
came back.
red.
The chart came back correct this time, John. Take a look.
Okay.
Whatever I did, yeah. Now we got the clear picture. Okay, great. Thanks for bringing that to my attention.
Okay, ROKU.
Mm-hmm. There we go.
Got hit this morning as well.
Any particular reason that you're aware of?
Actually, if you look at the daily, it's looking like we might have run out of gas, this stock. It's
Okay.
so, it kind of had a down, rallied up, and now it's coming off. So it looks kind of a little bit, there's you saw that huge sell-off from 180 down to 100, big rally back up to 170, and now it's got to decide where it's going next, but there is a risk of another leg down here.
Do you think Disney Plus, I think they're calling the new service, do you think that might be playing into this sell-off in some of the streaming services?
For sure, yeah. I mean, it's getting very competitive.
Is that Disney? DIS?
Yeah, they're calling.
They're not, they're ready for a leg up here.
Yeah, they're calling the Disney chief, the entrepreneur of the year or something, or CEO of the year or something like that. So anyway, this huge rally this morning, the fact that it's given a lot of it up is a bit of a problem. And the gold, the gold was looking gangbusters earlier on.
Yeah, let me bring that up on my intraday chart here. Yeah, we had an alert trigger this morning at 8 a.m. To be long gold 1480, I believe it was. Let me look, gold 1481, and the trade to target was 1491.
Yeah, if you look at the silver, you might put the silver up because the silver is actually not giving up anything like what the gold did. And I think that's kind of constructive.
Okay, there's silver.
So I mean, look, I think the day we go above today's high is a buy, is going to be a buy on silver, and the same with the gold. So whether this is a short-term phenomenon or whether it's something a little bit longer remains to be seen. But the Fed came out yesterday, and basically, I think what the Fed is.
What was your take on the Fed yesterday?
Well, they're ramping up inflation. They're going to kind of push it. They're going to push it. The risk of what they're doing is they're going to overshoot. And maybe create too much inflation, and then they could have a big problem. That's probably what's going to happen. And then, I talked to a gold guy this morning, and he seems to think there's another.
That's interesting to hear you talk about a gold guy, because to all of us, you are the gold guy. So.
Oh, thank you. Well,
I mean that, seriously.
Thank you very much. But this guy, I know a couple of fellows, a handful of guys who are really, really on top of things. And there is, the Fed could start doing these repos again, because there's, if you heard about Jeffrey Gunlack yesterday, what he was saying, there is something in the system that's not right, and there's a risk of it blowing up somewhere along the ways. I think the fact that they put in upwards of $1 trillion into the system a couple of months ago, causing this melt up in the market, the melt up's going to morph into gold sooner or later, and I think that's probably in the next quarter you're going to see that reflected. So, and looking at your trend line there. Obviously, if we start breaking that trend line, I mean, we're not giving, we're having it. We basically corrected from a very significant up move in both the gold and silver. It's resembling a flag formation. Is very frustrating, when with getting the next level started. But I think the next level is going to be monumental, because when it comes, it's probably going to come with a gap. Maybe we're going to come in one morning and find gold is up $20 or $30 for some reason, and that will be the beginning of a move of tremendous upside potential. I think possibly right up into the 2200, excuse me, something like that, 22 to 2400 on the gold.
John, there was Don, I just put a message into you in the chat box. He shared a link with us yesterday from Zero Hedge, I believe it was, about the Fed and some of the things that are going on. And Don, if you've got that link, I don't want to try to do it from memory, but if you could shoot me that link again, I wanted to get John's opinion and thoughts on it. So go ahead, John. If he puts it in,
Okay.
I'll let you know.
Thanks. So, by the way, FedEx is one of the stocks remember we called the bottom on that a few days ago, had a great move up. It's really starting to get some legs, this stock, maybe ahead of Christmas, among other things. But it's had a very good move up here in the last few days. So, and it kind of looks like it is heading higher. Look at the extension and look at today's move. It's really a pretty epic kind of a move for the stock. We're making new all-time highs, or we were this morning making new all-time highs in across, in the three major indices, and the semiconductors as well are hitting new all-time highs. That's a pretty powerful formula. It's just like Jeff Conlick says, he doesn't see any issues with the economy in the short term. The one thing that is bothering me a little bit, you were talking just before I came on, you were talking about, look at that island bottom down there, holy mackerel. Look at that.
Hey, Dr. Tom, welcome to the show. I've got an article I'm about to share, and I want to get both your opinion and John's opinion on that. But go ahead and finish your thought there, John.
So, the one thing that is that number in Canada, that 71,000 job loss in Canada, it shouldn't really be happening. If the U.S. is doing so well, Canada should be benefiting, and so should Mexico, because they're kind of joined at the hip. And so, I think back in 2007-8, you remember that Ireland was a canary in the coal mine. They had a loss of jobs that just came out of nowhere, and that was the first they were the first country to get hit. And I think it was the equivalent of losing 1.4 million jobs in a month in the US. 71,000 job loss in Canada is the equivalent of the US losing about 848,000. So it's a pretty big deal. Yeah, exactly. So, does it mean that maybe in the next few months we're going to suffer something like that? Remember, the first quarter for most of the last decade, the first quarter has been a bummer for the job numbers. Often they've come in weak. We had a couple that were close to zero during the Obama years, and so there is a chance that there's going to be an underperformance on the job side in the first quarter, and this could be, this could represent some sort of a top in the market in the first quarter. And I would consider 2020 to be fairly similar to 2000, and we topped out on March the 10th was the first top in 2000, and March the 24th was the second top. And then after that, we went into a real downturn. There was a guy doing the numbers yesterday on the college, what do you call the thing, the states, the votes.
The Electoral College.
Right.
Yeah.
And you know, if Texas went blue, you know, there's a chance it could. Biden might scrape through, even though, you know, so it's not, nothing's guaranteed at the moment in terms of what could happen. So, and you know, if that happens, then that's your 2021 bust that I've been talking about for a while.
Mm-hmm.
So,
Right, let me, go ahead.
you know, with all this stuff going on, I mean, this endless stuff going on here with the impeachment and everything, it's very damaging. You can't. It's very unfortunate that this whole thing has happened. Actually,
It is. Let me share this with both you and Dr. Tom real quick. Don shared this with us yesterday, and Don, I know you highlighted. I won't be able to share the entire article, but I just want to hit a couple of the highlights. Again, this is from Zero Hedge. The title is When It Becomes Serious, You Have to Lie. Update on the repo fiasco. Occasionally, problems reveal themselves gradually. A water stain on the ceiling is potentially evidence of a much larger problem. Painting over the stain will temporarily relieve the unsightly condition, but in time the stain will return. This is analogous to a situation occurring within the banking system. Almost 3 months after water stains first appeared in the overnight funding markets, the Fed has stepped in on a daily basis to repaint the ceiling, and the problem has appeared to vanish. Yet every day the stain reappears and the Fed's work begins anew. One is left to wonder why the leak hasn't been fixed. In mid-September, evidence of issues in the U.S. banking system began to appear. The problem occurred in the overnight funding markets, which serve as one of the most important components of a well-functioning financial and economic system. It is also a market that few investors follow and even fewer understand. At that time, interest rates in the normally boring repo market suddenly spiked higher, with intraday rates surpassing a whopping 8%. The difference between the 8% repo rate recorded on September 16th of 2019 and Treasuries was an 8 standard deviation event. Statistically, such an event should occur once every 3 billion years. Now, Don, I'm going to wait for you to give me that highlight. I encourage everybody to go to zerohedge.com. And if you just search Zero Hedge and repo fiasco, you'll get not only this article, but they will link you back to the original article that they wrote. This is a big deal, and they're right. It's not something most investors follow. It's not even something that most investors understand. But it is, as they said, one of the most important components of a healthy economy and stable markets. That stain on the ceiling, it's going to keep coming back, and it's going to keep coming back until it gets fixed. Quick question for you, John. John, don't you think gold could make one more push down to the low 1400s to flush everything out?
After today, this is not a very good development that happened today. You know, and you know, look, it's the market's kind of pulling back up right now, as one would expect. But it's when you get a big up move like this and it gets reversed, that's never a good sign. But I'm encouraged by the silver being so strong. The palladium and platinum remain very strong today. So there's, in the same way that we just came back up in the last few days from a lower level, I certainly wouldn't rule it out. And I would say that if we did get back towards today's highs, it would be very, very bullish indeed. So, and like I say, I think you know, with this repo fiasco, something could happen any day, any night. You could come in, find the gold is up $20, $30, and you might have a kind of a $50 up move in one day, and that would probably set off this chain reaction. And remember, look, there's banks being bailed out in China. There's half the banks in China failed the stress test. You've still got Deutsche Bank problems in Europe, and then you got Christine Lagarde at the helm now, basically, who knows what she's going to do, but she's going to pump the system up big time. And then if Boris Johnson wins, you're going to see an expansion in the UK like you've never seen before.
When is that election? I thought it was today.
It is today, yeah.
And has it already happened, or?
It's in the middle. They don't have any really. There's no vibes.
They're 6 hours ahead of us.
There you go.
It's open till 10 o'clock tonight.
10 o'clock their time.
Yeah, so
that'll be 4 o'clock in the morning.
You probably won't get. Yeah, we'll probably get the first.
CFRN traders, we work the night shift, so we'll be trading Globex tonight as the numbers come in. Now, Don was kind enough to find that highlight and share it. So let me give you this real quick. In the article, the BIS implies that the Fed is providing liquidity to banks so that banks in turn can provide the hedge funds funding to maintain their leverage. The Fed is worried that hedge funds will sell assets if liquidity is not available. Instead of forcing hedge funds to deal with a funding risk that they know about, they are effectively bailing them out from having to liquidate their holdings. If that is the case, and as the central bank to this little thing makes it so difficult to read. Hang on. If liquidity is not available, instead of forcing hedge funds to deal with a funding risk that they know about, they are effectively bailing them out. While predictable, well, this part I've got to cover. Instead of forcing hedge funds to deal with a funding risk that they know about, they are effectively bailing them out from having to liquidate their holdings. If this is the case, man, this thing just won't scroll up right. Hang on, let me give it one more try. Maybe I can open this thing up and see it all in one screen. Oh, that makes it so much better. Okay. If that is the case, and as the central bank to central bankers, the BIS should be well informed on such matters. Why should the Fed be involved in micromanaging leverage to hedge funds? It would certainly represent another extreme example of mission creep. I like that. The Fed and the banks grossly underestimated how much of the increased U.S. Treasury debt issuance they would have to buy. In just the last quarter, the Treasury issued nearly $1 trillion of debt. At the same time, foreign sponsorship. Now, this is when, other folks come to buy our paper. At the same time, foreign sponsorship of U.S. Treasuries has been declining. While predictable, the large amount of cash required to buy Treasury notes and bonds may have created a cash shortfall. For more on why this problem is even more pronounced today, read the previous article on Zero Hedge called Funding Uncle Sam. If this is the case, the Fed is funding the Treasury under the table via quantitative easing. This is better known as debt monetization. This is better known as a very big problem. It's staring us in the face. Dr. Tom, what are your thoughts?
Well, I find it very disturbing. You talk about mission creep.
What was that? What was that other title? Sorry, I didn't mean to interrupt. Don't. What was that other title you said? Funding
Uncle Sam.
Funding Uncle Sam.
Funding Uncle Sam. Yeah.
And what was the first article title?
The first article title.
Repo Fiasco.
There you
Repo
go.
Fiasco. Yeah.
When it becomes serious, you have to lie. This is an update on the original article called Repo Fiasco. The Chinese have stopped buying our paper.
You hit the nail on the head there, Dwayne. This is the problem. The overseas guys, of China and Russia and all these people, aren't buying the U.S. debt anymore. So it's really up to the Fed. If you remember a long time ago, I said...
Which is the American taxpayer.
Right. Remember, before the 2007 property crash, there was a crash in 1994 in Mexico. and at the time, Telmex was the most valuable company, or most widely held company in the world, and everything seemed to be going like there was no tomorrow. And then they had this big real estate crash in Mexico, and they just saw a real wipeout. And I said at the time, God help us if that ever happens in the U.S., right? So the 2007 2009 was a real estate crash of monumental proportions, and and so how did remember in the U.S. bailed out Mexico back in '94 for like 50 billion. It wasn't so much at the time. Well, it was a lot at the time, less today, but it fixed the problem. I said, who's going to bail out the U.S.? And it's the Fed. The Fed are the only people who can bail out the U.S. and they bailed us out. They put remember, there's 30 trillion gone into the economy, the global economy in the last 10 years. And that's why the gold and silver markets are going to blow up in the next 5 years, because that sooner or later you have to pay the piper, and it's coming, and it's coming. And this is probably the cracks appearing in the dam right now of what
the
is
little
going
Dutch
to
boy doesn't have enough fingers.
Right.
Dr. Tom, what's your take on this?
Well, I've often said that when things really hit here, there's not going to be any Marshall Plan, to come and rescue us. The only
some of our audience might not be old enough to remember the Marshall Plan.
Stop reminding me how old I am, please. I always have to make a crack about my age. Yeah. Anyway, folks, for those that don't know, after World War II, General Marshall was in charge of basically rebuilding Europe. And not only did we rebuild our allies, but eventually we ended up rebuilding our enemies. That wasn't under the Marshall Plan. But anyway, the only country really
that's
that I
our
can
heritage. We beat them up, then we patch them up.
Yeah, but China's really the only country that would be big enough to bail us out. And they hate our guts. I mean, at the highest levels of the Chinese government, the Politburo, or their version of the Politburo, the generals, the Chinese communist leaders, they don't ever refer to us as America. They refer to us as the enemy. That's the way they look at us. We're the fools that buy all their garbage. I call Walmart China's outlet mall.
China, it's funny you should say that, but China has stopped buying our garbage. The American people have been sold a bill of goods for a very long time about recycling, and it's good for the environment, and blah, blah. What nobody knows is that we haven't been recycling diddly. We've been shipping our garbage to China. They've been turning it into little plastic ninjas that you can buy at the dollar store. But China has said enough. They're not buying our, folks, when I say garbage, I'm talking actual, what you ate at McDonald's last night, that refuse that's left, they're not buying it anymore. The styrofoam and just all of our garbage, I don't know of any other term. And if you guys,
talking about the garbage they sell to us.
No. Yeah. Well, that's the thing is we would sell them our garbage. They would turn it into fresh garbage and then sell it back to us. It was this cycle, right? And it kept going for a long time, but no more. Guys, and I know this sounds like very dramatic. I'm making it up, but just Google it. China stops buying America's garbage. And I'm talking the trash can. Go ahead.
As far as the Fed, being able to bail us out continually, and you correct me if I'm wrong on this, John, but the bottom line is that when money's created, the Treasury has to create debt that the Fed then buys. I mean, 3 decades ago, most U.S. debt was bought by Americans and American companies, and very little was bought by foreign nations and foreign companies. And then the shift happened. America started getting wise, and fewer people were buying American securities, the treasuries. And even PIMCO, do you remember that? the biggest fund that bought this, out in California for, well, they stopped buying American debt totally. And I thought it was going to be forever, but after a couple of years, I guess the government came and twisted their arm and threatened them or whatever. So they started buying them again. But at that point, there was a lot less American buying and a lot more foreign buying. Well, now the pendulum has swung all the way to the other side, and foreign governments are staying away from our auctions in droves, and Americans still are not crazy about buying our treasuries because they know the huge debt burden the country has. So we have this little sleight of hand thing going on where, if you took $50 out of your right pocket and put it in your left pocket and said you loaned yourself $50, we'd laugh at you, right? Well, that's what happens when the Fed goes and, quote, buys U.S. treasuries. They print up funny money. They buy it to make it seem that the treasuries are still attractive and so on. But eventually that's going to fall down around their ears because they can't just keep on issuing debt and debt and debt forever. Right now, what we state as our national debt around between $22-23 trillion. You know what the IMF says it is? They tell the truth. They use the same bookkeeping that they use in the rest of the world, and our true national debt, including all our unfunded liabilities, is like $126 trillion. So way more than 100 trillion more than we admit to. So everybody around the world knows the problems we have. We can talk about our great economy all we want to, but the fact is that we're bankrupt. We owe more than we own, and people will just not continue to buy that debt. So that's my take. Did I shut down the radio?
Sorry, you're dead. I was saying you're dead right. This is why there's a big problem coming in the next couple of years, going into, and the dollar will be the casualty eventually when that happens. So we're getting pretty close. The dollar's rallied a bit today. So, maybe if the Brits, if the election comes in right tonight and the pound goes higher, it might lift up the currencies and get the dollar selling off. But we're not quite there on a dollar confirmed sell yet. We really got to close the year below 96.5. 96 more or less would really put a very big sell signal over the currency. So,
I just had a thought, John. You and Dwayne and I ought to get together and write a book. The truth about the U.S. economy, something like that. I think it'd be a bestseller.
Thank you. Well, it's an unfortunate fact of life. I know, right now, we used to play that song back in 2007, Remember Good Times, by Chic. It's sort of the same all over again, but look, this has been such a phenomenal 3 years so far. Can we keep it going for another year? Probably, but it's going to be a very hard act to follow in the next 4 years, no matter how much is done. They might be able, if they put an infrastructure spending bill, 2 trillion bill, it could keep the economy going for another year. But every second term usually ends very badly. There's a honeymoon in the first part of a second term, and there's then after about halfway through, that's when you had the crash of '87, Reagan's second term. So it's. And this, maybe I should get some notoriety and call it the curse of 21. That's what happened in 1921, and it's probably going to happen in 2021.
Well, let's just pray that the Republicans retake the House and hold the Senate. I don't think there's any doubt about holding the Senate personally, but if we had control of all three, the White House, the House, and the Senate, then I think we have had a much better shot at being able to get some bills passed that would continue good economy, and maybe even, please God, start to reduce the national debt. You know, I mean, at some point, somebody has to address this.
It's almost impossible. I don't think that, you know, it's really going to be very difficult to get that. The projections right now are very gloomy for 2023, talking about 27 trillion, 29 trillion. I mean, we're at 23 trillion already. There may be, you know, because of this year, because of the next couple of years, there's a chance that the debt might come in a bit, you know, the deficit might actually reduce somewhat. But to any extended, and look, if things blow up, it's just going to compound the situation drastically. There's no way out. The only way out is monetization of the debt, which, you know, will happen over time. I mean, that's why I think there's. Look,
maybe it's time we privatize the government.
If the debt goes to 30 trillion, if gold ain't 3,000, then there's something wrong with the world. You know, so the likelihood of gold going to 3,000 by 2023 is very high indeed. So I think you can be, I would say the low end range for this next 4 years is probably about 3,000 on the low end and potentially 8,750 on the high end. If you know, everything hits the fan. So
I'm going to go on record at $5,000.
Yeah. Well, that's okay. Right in the middle. Right in the middle.
So, no, but that's what I've been saying for the last several years.
Yeah.
I just don't think I've said it here. But, you know, most Americans don't have an idea about the kind of things we're talking about here. Matter of fact, that's what I'm speaking about today. Most Americans are clueless about money. If people knew what our government was doing to us, there would be rioting in the streets, literally. I mean, they say, well, you know, we reduced this budget or reduced that. They didn't reduce anything. They never reduced anything. All they do is reduce a little bit of what they were going to increase. So if they talk about a 10% decrease, it's a 10% of the 20% increase they were going to do. You know, and they never go backwards. They never do anything. And frankly, I despair of any reduction in the national debt because Trump just doesn't seem to care about it. As much as he's great on so many other things, he did not run as a fiscal conservative. I never heard him mention lowering the debt once, like Reagan constantly did when he was running. But I never heard Trump mention that once.
Well, when Trump gets backed into a corner, he goes bankrupt. Now, I like Trump, and he's done great things for this country, and I hope to see him win this upcoming election. But,
absolutely.
I mean, anyway, that's enough on that. But go ahead. You continue with your thoughts.
Well, I just wrap up with this. I mean, you know, if Trump really did care about lowering the national debt, I don't think he's philosophically inclined towards that. He doesn't see debt as a problem. As a businessman, debt was always a tool for him. So, you know, there's two ways you can lower the debt. One is to increase taxes and get more money in, and the other is to decrease spending. But he's wanted to do both at the same time. He lowered taxes and he has increased spending. You know, military spending, I'm totally on board. Yes. I know we need the infrastructure's building, but you can't do both those, lower taxes and increase spending, and expect any other result than the national debt to go up.
Well, it can go up. look, it's sort of like trying to spend your way out of trouble, and so far we've done a pretty good job of that, you know, with the way. But it's not something that can't go on forever. Now, you know,
well, at some point the music stops, and you got to pay it back.
The next year could be actually a good year because the economy is doing so well. There might be some pretty good revenues, tax revenues, coming in that might actually reduce the deficit somewhat. But remember, Trump's in a very difficult position because this thing that just got signed yesterday, where they created the Space Force and all that, basically he had to give some concessions to the Democrats. And this is it's like, this USMCA, but when that bill is signed, I bet you it's going to be loaded with pork all over the place. Because that's probably the deal. That's why Nancy decided to get it done. Trump got cheated. I mean, listen, he was a bit new in the job when it happened, but he was kind of promised like $25 billion for the wall, but it was deferred into the next thing, and he should have taken the $25 billion when he had the chance, because they reneged on it. And he ended up giving away like $1 billion. I don't know how much checks. It was a huge amount of money that was signed off to get that bill passed. A few years ago. That's
said as much about the USMCA. She when she announced it.
Like it was her brainchild.
Well, but what she said was, we passed the USMCA just an hour after they announced the articles of impeachment were going to come out. And then she comes out and does the second thing, and she says we passed. But she says this is not this is not a win for Trump. This is not his bill. We have vastly improved it, and in politics speak, that means we've added in billions of dollars worth of pork to it.
Exactly. And the last bill, Trump said he's never going to sign a bill like that again. But it's very, this is the way this stuff gets done, and yes, it's not all him. This is the way the Congress is going to keep going till the end of time. So it's going to be near impossible to change anything, and they're just going to keep on going the same way. As long as look, the economy is 22.5 trillion almost right now. So it's only a little bit behind the debt. It's keeping up with the debt. So, and as long as that's the case, we'll probably be able to keep going more or less at the rate we're going. But there's going to be at some point, they're going to widen apart. And that's going to come in the next few years. Because I think the projections for the economy are only about 24 trillion by 2023, and the debt's going to be 29-30 trillion. So there's going to be a huge chasm between the economy and the debt, and that's going to be a real problem.
Well, I think we can wrap this up with a simple question.
Yeah.
What do you call 1,000 politicians at the bottom of the ocean?
1,000 politicians, bottom of the ocean. Do you know, John? Because I don't. A good start.
A good start.
Yeah, that's funny. Somebody just needs to learn how to say quid pro no.
By the way, this morning I just caught a little bit of this thing when the Swalwell was rattling off kind of potential crimes on U.S. code on this bribery allegation. Well, I think they should take out impeachment papers on Obama because he bribed the Iranians with 1.75 billion or so, and probably 150 billion as well. So,
and that's just what we know about.
Right. So that's a much bigger deal than anything that Trump has done.
All right. Well, guys, thanks to both of you for your take on that. Dr. Tom, what do you... now, John, I'm going to be around after Dr. Tom departs because I still have to go through the recap. If you want to... You're certainly welcome to hang out with us. But if you want to pop back in then and add some more commentary, you're certainly welcome to do so.
Okay, let's see how things go. But thanks very much.
All right,
great
John.
to talk to you, Tom.
Okay.
You might be... Thank you. Appreciate it. You might be interested in some of the statistics I'm about to bring out here.
All right, I'll keep an eye on it. Thanks very
Shall
much.
I send you the charts?
Please do.
Okay.
Yes.
Here they come.
Here they come.
Walking down the street. I can't remember the next line. Here they come. Alexa, play Here They Come Walking Down the Street.
Here's your story. The NBA has played
Alexa,
a quarter
stop.
of its schedule already.
Alexa,
and we've
stop. She doesn't always get it right. Okay. Most Americans are clueless about money. Hey, funny you should mention that. We had a special edition yesterday. I'll send you a link to the edited part. It turned out to be a 4-hour show. But we talked about this very topic. So please, go ahead.
It'll be very interesting then. Okay, well, I mean, this is self-explanatory. This is basically, this comes from a lot of the data comes from two different surveys. One done by Genesis Mining just back in September, so this is fresh information. And it shows some disturbing facts about American citizens' own knowledge of their money. 24% of the people surveyed believe that the Federal Reserve is responsible for securing U.S. gold reserves. What in the world? 54%, 54% believe that Federal Reserve banks are owned solely by the U.S. government. Couldn't be farther from the truth. 29%, this is wild, still believe that the U.S. dollar is backed by gold. It hasn't been backed by gold for close to 90 years now. And yet 29% of people still believe that there's some kind of backing to our money. 26, go ahead.
Let me just share. I heard this morning. What's the Boeing, what's the number of the plane, the one that they've had all the problems with? 7 what?
Something max. Yeah.
Yeah, okay. So they were out surveying people, asking them questions, and the questions were about Boeing and blah blah. And then they asked, the final question was, have you flown on the whatever Supermax in the last 6 months? And of course, anyone who said yes, they discounted the whole thing. I think every survey should have some buried thing in it like that, because, well, they do it on Fox all the time, and I'm sure the other channels, they do it in the opposite way, but they're out interviewing the man in the street, and some of the answers are just so far out in left field. And the way they did this Boeing thing, it unmasked the ignorance of so many people, and it was kind of embarrassing. I felt bad for the people.
But you know, this is a standard practice, not just in polling but in tests. You know, I'm a professor at a Bible college now,
Right.
and part of my job is writing tests. And so one of the options that you always give people is what's called a distractor. It's the one with all the flashing colored lights and jumping up and down and say, pay attention to me. It's something that people would just sort of gravitate toward. But it's totally off base. So that's what that question about gold is. I mean, people have heard about the gold standard. They know the Federal Reserve is something, you know, but that was a question was designed to suck people in, because
Right.
I can't believe that people, if they really thought it through, could be that stupid.
Yeah, another
But
great trick
anyway.
question would be, which branch of the government does the Federal Reserve belong to? The judicial, the legislative, or the executive? I can only imagine the answers that would come out of that. But...
Oh, yeah. Well,
26%.
26% believe that banks are required to keep 100% of the money deposited by customers in the banks. In other words, your money is always available. You can go pull it out anytime you want. People actually believe that.
Yeah, they do. I mean, people that I know. Yeah, go ahead. I mean, it's just, how did we get here? I
How
don't
could
know.
the bank make money if they did that? You know, it's impossible.
Right.
So here's some other disturbing trends, and these regard something I've been doing a lot of studying on, the emergence of a cashless society. The government has actually begun a war on cash. Okay.
Oh yeah.
So 67% prefer to use debit or credit cards for buying things. That's okay. And this is not evidence of any conspiracy. It's just we've been pushed in this direction. I remember going to the grocery store when I was young, and no grocery store in town would ever think about accepting your credit card. It just didn't happen.
Oh yeah. You know, I'll never forget. I was in a Fry's, which is, I don't know if that's a national chain or not, but I walked into a Fry's grocery store. Gosh, this would have probably been early '80s, maybe mid '80s, somewhere in there. Late '80s. Anyway, it doesn't matter. It was the first time I saw a checkout lane that said, "We accept Visa and MasterCard in this lane." And I remember now I didn't know anything about finance. I wasn't involved in the markets. I think seems like I had just gotten married, which would have been '83. So correct me if my dates are wrong, but you're right. I was completely blown. Now, who in the world is going to buy groceries on credit? Well, a hungry man, for one.
Yeah.
But yeah,
or even a debit card. It's just the whole idea of the plastic. I mean, this is leading us to revelation, and I'm not going to get off preaching, because if I did, we'd never get done here today. But we're starting to move toward a fulfillment of prophecy, and this is the way that the beast is going to be able to control the world, because everything is going to be done electronically. So people should want cash, precious metals, and so on. But
try getting some cash. Just try getting some cash today. If you want more than $1,000, they're going to look at you funny. If you go in there and ask for $5,000, they're probably going to call security.
Yeah. And then,
they don't want to give you cash money. No.
Yep.
And if you bring in cash money and you want it, I walk into the bank with $5,000 cash money to make a deposit. Unless they know that I run some kind of, like an ice cream truck, something that, deals in cash every day, some banks won't take it.
Well, it's even getting to the place now where you can't. I have a friend, he has one of these tropical snow trucks he takes around to craft fairs and so on, and they sell these little snow cones, And, of course, that would be a cash business.
Right.
But now, he tells me that 70% of the business they do is on one of those little square devices plugged into their cell phone for a $2 item.
Right.
I mean, it used to be, they wouldn't let you use a credit card unless it was at least $50.
Sure.
Because they had to cover their percentage. Now, I've gone to the airport and bought a candy bar or a magazine, for $1.50, and I just run my card because I wanted that to be charged to the trip, so I could take it as a tax deduction.
Sure.
It's insane. So that's where it's going. 30% of people report that they hardly ever use cash. 30%. Another 30%. It's actually 37%.
Probably more than 30% of Americans don't have any cash.
Well, that's probably true
in the bank or otherwise, and that's a real sad picture of the greatest nation on the face of the earth.
Yeah, some huge percentage. I think like 58% of people in this country, the most prosperous nation on earth, don't have $1,000 in the bank. In other words, they couldn't cover a $1,000 emergency.
That's right.
And when it gets to retired people, it's even worse. The vast majority, probably over 80% of retired people, couldn't write a check for $1,000. So I've got a mistake on this slide. I copied it and I didn't cut off the first part.
When's the last time you saw somebody write a check? Well, for business perhaps, but I mean in the grocery store.
I tried to write a check in a store, and this 20-something kid said, "What is that?" Literally, he didn't have a clue.
Let me call my manager. I don't know if we take these.
Yeah. I'll tell you a true story, because I'm just a little crazy and I just come up with this stuff, I'm at a Whole Foods store one time, and this like 16-year-old
girl. You
girl.
need credit to buy food there.
Yeah, it's expensive. This little 16-year-old girl is looking at the guy's credit card he just handed her, and it was from Chevy Chase Bank in Maryland, and she saw Chevy Chase, and he knows he's on Saturday Night Live, this is a long time ago, and she says, "Is this a joke?" And I was right behind him, and I said, "Yeah, of course it's a joke. I got a John Belushi credit card in my pocket right now, She ended up not checking the guy's credit card. I should have kept my mouth shut.
Wow.
Yeah, I mean, she didn't know. Anyway, 37%. 30% say they hardly ever use cash. 37% only use it once or twice a week. And the rest very, very rarely. So the biggest problem I see right now is that Americans don't know who controls the money. If you don't know who controls it, you don't know what it is. So when they ask the question, what does the Federal Reserve do? Here are the answers. 6.6% said they collect taxes. 18% said, I don't know.
Well, God bless those people for just being honest.
Yeah, they had no idea what the Federal Reserve was or what it did. 24% said they were responsible for securing the U.S. gold reserves. And so you can see how it breaks down there. About half of them, surprisingly, got it right, that they oversee U.S. monetary policy. But the others are just off the wall. Who decides to print money? Who makes the decision how much we're going to print, when we're going to print it, and so on? Well, 4.8% believe that Congress makes those decisions. And, less than 5%, 1 out of 20 Americans got it right, because under the Constitution, Congress is the only one who's allowed to make those decisions.
Right.
8.8% believe that the U.S. Mint makes the decision. They make coins, guys.
And when they get backed up, the Franklin Mint pitches in and helps out.
Sure. Why not? And 18.4% did not have a clue. Okay. So the majority of people said that the Federal Reserve does make the decisions, and that's true. It's not supposed to be. It's supposed to be the U.S. Congress, because the Constitution says that only Congress should have the power to coin money. Okay, here's a good one. Who owns the 12 regional Federal Reserve banks? All right.
Okay.
If you went out in the street today, here's the kind of answers you would get. 7.4% believe correctly that the Fed is owned by private corporations. So only a tiny percentage of
surprised
Americans.
that many people actually knew.
Yeah, me too. I mean, that's like
They must have been
12%
doing
or
this
something.
survey outside the Library of Congress or something.
Yeah. Certainly didn't do it at a university.
Right.
16% believed it was some sort of partnership, quasi-governmental thing between the corporations and the government. 22.1% didn't have a clue. 54% believed that it's the government. Okay. So,
Well, you got to admit the name's a little tricky, and that of course was no accident.
oh yeah, I mean, look, when they rammed through the Federal Reserve Act in 1913, it was very much the way that Obamacare was rammed through. It was a Christmas Eve session, and the whole story, The Creature from Jekyll Island.
Sure.
People haven't read it; they
Folks,
should read it.
Yeah, and what he said, if you have not read The Creature from Jekyll Island, Google it. It's out of, whatchamacallit has expired, so you can get it free. You're not stealing from anybody. You can get a copy, a PDF, legally on the internet. Read it.
Right.
Curl your hair.
Well, I actually went down and visited the scene of the crime personally.
Did you really?
Oh yeah, we were on vacation in Savannah. It was kind of neat. We took an Amtrak up from Palm Beach to Savannah, and we'd never traveled by train before. Really enjoyed it. And
Yes.
we didn't rent a car. We stayed at a hotel downtown. Most of the touristy things were downtown, and museums and whatever that we wanted to go to. So we just walked everywhere. But I did rent a car one day, and we drove, I think, like 2.5 hours down into Georgia, and went across the causeway to Jekyll Island, because I wanted to actually visit the scene of the crime, where this secret compact was made by very wealthy bankers and politicians to take control of the United States government. It was a coup. The Federal Reserve Act was a coup. Now people say, well, don't every country have a central bank? Well, I mentioned earlier, yeah, they almost all do. But we didn't have them when we started the country. Why? Because the founding fathers had suffered under the evils of central banking. They knew that it profited the bankers and impoverished the people. So
Thomas Jefferson nailed it way back then. I'm sure you probably know the quote verbatim. I could mangle it.
I do.
Go ahead.
Well, what he said was that if we ever allow the private issuance of our currency, our children will grow up in a land that will grow up homeless in a land that their fathers built. That's not an exact quote, but that's pretty much it. And it's true. I mean, 90% of mortgages are owned by Fannie Mae or Freddie Mac, which used to be quasi-governmental, but now are owned by the government since the big, Great Recession. And so basically, I ask any crowd, do you own your house? Most people raise their hand. And then you say, have you made your last payment on the house? And hardly anybody will raise their hand, because they're always encouraging you to refinance and so on. Hardly anybody in America owns their house, because until you made that final payment, if you just owed one payment and you got sick, the bank can come and take your house away from you. And even after you do, if you can't afford to pay the horrendous taxes, I mean, I pay as much tax on this house as people in some other states pay for their mortgage every year. And they could take your house away from you. So nobody really owned anything because of private corporations taking control of our government. So the Federal Reserve is, as I often say, about as federal as FedEx. There's nothing federal about it. Okay. What backs the U.S. dollar? A lot of confusion here as well. 4% believe that oil backs the dollar. Why they would think that, I don't know. 5.8% believe that bonds back the dollar. Well, in a sense, that's true, because you can't issue money unless there's debt of an equal amount. So instead of gold backing the dollar like it used to, in a sense, it's backed by bonds.
Okay.
7% believe that nothing backs the dollar, and that's the closest to the truth.
Yeah.
23.6% were clueless. I like that little guy, don't you?
He plays that part quite well.
He reminds me of you quite a bit. If you were wearing glasses.
Yeah, same haircut. What backs the
29.
dollar? What backs the dollar is the American worker. The
American
economy. The faith in the American people, the respect and the faith that other countries have in the American people, and I mean that's the very thing we've been talking about. That faith in America and in the American people is being eroded at every turn. And I won't even get into the never-ending apology tour that certain segments of our government seem to relentlessly be on. I mean, President Obama, he kind of started that train wreck, and it continues. And it's gone way beyond.
We have to continually apologize for being successful. I mean, that's what it boils
I've
down
got to
to.
apologize for being white. I've got to apologize for being a man.
Well, actually, you're not just a white man, you're an angry white man. You know, you can't say white man anymore without saying the word angry. Okay.
Yeah, you know, and I'll tell you
Never
what,
do.
if you grew up in the house I grew up in, you'd still be if you're looking for that privilege that we supposedly, you know, I grew up, I'm not ashamed of this. Yesterday, my guest, Tony, I believe it was, she said that she grew up dirt poor. I always considered my family as growing up working class poor. I mean, my folks were really hard-working people, but they lacked education, and they lacked opportunity. I mean, they all held jobs, and you know, my grandfather was the sheriff, and I guess just leave it at that, working class poor.
Yeah. So, as I mentioned earlier, 29% believe that gold backs the dollar. That hasn't been the case for almost 90 years now. 30% believe the government backs the dollar, and that's the true answer. If you go to treasury.gov, they say that the dollar is backed by nothing. They use that word nothing. And then they say, in a sense, it's backed by all the goods and services in the U.S. economy. Okay, try to collect on that. We probably need to wrap up on this one. The banks hold all your money. A lot of people believe it. 52% were smart enough to say no. They know that their money doesn't sit there at the bank waiting for them to come get it when they need it. 26.8%, almost 27% believe that if they go and deposit $1,000 in a bank, it stays there. It doesn't go anywhere else. It's theirs. Okay. 21% were clueless. They didn't have any idea. I take it down there, and when I want it, I go and get it. So why do I care what happens? You know, why do I care what's inside the sausage? You know what I'm saying?
You don't want to know.
Yeah. So
lips and hips. Go ahead.
What percentage of cash deposits do the banks actually, by law, have to hold in reserve? Well, 9% got it right. They thought it was somewhere between 1% and 10%. Okay. Mm-hmm. Nobody else was even close. 37% thought it was somewhere between 11 and 50%. 15% said it was 15 to 76%. And 43% had no idea. They didn't know there was such a thing as a reserve. All right. That means that 9% fully understand how much the money the bank needs to hold at any given time reserve, while most of those who were surveyed, 43%, didn't know at all. Okay. This I'll hold for next week. Most Americans are in serious financial trouble, and a lot of them don't even realize it. So we'll talk about that next week. But
okay,
I'll tell you the answer to this, though.
Okay, good. I was going to ask. I mean, why don't they do something about it? Well, I'm going to, based upon the answers to all of these questions, I'm going to guess that most people don't know what to do about it.
They don't. Some of them don't even know that they have a problem. Some do, but as you see in some of the other surveys, they just think there's no hope. They think, I'm in debt and I'll always be in debt, and there's no way I'm ever going to get out of that. This is my lot in life. But there is a way, and God prescribed it. He invented the gold standard. It's the one way that economies can thrive, whether it's a national economy, your church's economy, your family's personal economy, your business's economy. If you hold gold and are patient, you will see the times that John was talking about where we're going to see gold at least at 3,000. Gold has gone steadily up with with just a couple of bumps in the road for decades and decades and decades. And it's not that gold becomes more valuable, but it's just that the dollar becomes less valuable. And so it takes a lot more dollars to buy the same amount of gold. It doesn't matter how it happens.
Dr. Tom, you're going to love watching. Again, I've got to edit out that portion of yesterday's program. But Tony, longtime CFRN partner, she was on the show, and it was kind of like having Dr. Tom on the show because some of the examples that she used were so similar to the ones that you've used, like, the value of a home and the price of an ounce of gold and throughout the ages. And then towards the end, via video, we took a trip down into a mine in Brazil. Wow, did I get claustrophobic just watching that thing. But you're going to enjoy this. And then I had no idea what you were going to talk about today, but yesterday's good word for the day, which I've already edited out, and it's on my personal Facebook page, which you have access to. If you get a chance, have a listen to that. It's about 15-20 minutes, but I talk about the fact that so many people are in financial trouble, and they, they're looking for all the reasons, whether they're blaming their boss or the economy or God. What they're not doing is they're not taking a look at themselves. There's scripture that says, I will supply all of your needs, etc. But there's a bit of a disclaimer. I don't know if that's the right word, but it says you've got to do something too.
Yeah.
And I don't know if you know exactly
with
which
every
scripture
promise
I'm referring to.
comes a responsibility.
Well, it says you got to be
every promise
obedient.
in the Word of God.
If you're going to stand on the Word of God, if you're going to hold God to His Word, if you want Him to stand and deliver on His promises, you got to do your part. And in the particular scripture that I was referencing yesterday, it says you got to be obedient.
That's right.
So we got to stop pointing fingers, and go look at the man in the mirror, because that's where you're going to find the answer to most of life's problems. And then you're going to find yourself on the floor in your face, asking for forgiveness, asking for help, and a man with a broken and contrite spirit who comes before God and asks for help. If you want to see your life turn around, don't go chasing the latest fad. Do what I just said. Listen to that. I hope everyone who wasn't here yesterday, and I'm no great orator, I'm no great preacher, but I think that yesterday's message had some meat, and I think a lot of people will see themselves in that, and hopefully you'll find a path out of the situation that you got yourself in.
Well, I would love to get a link to that.
I will. I'll send it to you via email as soon as I'm done.
Excellent. Well, thank you, sir. Thanks for the opportunity to be with you. And Merry Christmas to you, to your family,
let's
to your
talk
dog,
Christmas,
and all your audience here.
Okay, I'm sorry. Christmas falls on a Wednesday?
Yes.
Okay. Now, the markets will be, I'm assuming they close half day Christmas Eve. I'm trying to remember from all the years past.
That's normal. Half day on Christmas Eve, and then all day on Christmas, of course.
Yeah, so will the markets themselves be open full session Thursday and Friday?
Yes. They never, I've never seen the markets close two full days. Okay. Never. Except, of course, after 9/11 and, bank holidays and things like that.
Boy, we didn't know if the markets were going to reopen. I remember that so well. Okay, thank you so much, Dr. Folks. Dr. Tom has put up on the screen CFRNgold.com. That's where you can go, get your starter kit, learn about investment-grade gold, and perhaps in there you will find some of the answers to some of the problems and issues and some of the things we talked about today.
Amen.
Amen, brother.
Well, thanks a lot.
All right, folks.
Good talking with you.
Yeah, good talking to you, Dr. Tom. And folks, I'm going to take, because I've got about another 45 minutes of information I need to get out to you as far as the recaps and today's good word for the day, etc. So we're going to take an official 5-minute break. In fact, I'm going to put it up on the screen So anybody that's wandered away from their computer, when they come back, they won't think we've abandoned the ship. Let me get that going. Yeah. Now I'm going to put a big note up, and I show it to be 12:07 my time. I'm on Mountain Standard. So show will resume. Oh, let's try that again. Get that out of the way. Show will resume at 2:15 p.m. Eastern. So if you need to, go to the men's room or the ladies' room, walk the dog, or maybe just want to make a sandwich. Whatever it is, I'll meet you back here in about 7 minutes. Okie doke. All right. Just going to hit pause. Everything. Now, I'm going to let the video continue to roll on YouTube, so there are anyone who is watching the show, not live, but after the fact, you can just go ahead and fast forward up to where you see my mouse start moving again, because you'll know we're live. See you in 5. All right, guys, we are back. Okay, we will pick up where we left off before our guest. S&P, we've already covered that. Now, this is referring to previous day. This is today. Today's Concierge Trade Alert for the S&P 500 be long 3151. This is a Logic 247 alert that has not triggered as of yet. And we're still firming up here at the current weekly zone 56/57. And I thought I put, yeah, I did. Here we go. Here's something to consider. We talked about that earlier. 3164, which we haven't seen, to 66, to 69. Then there's the 73 that's still out there, hasn't been triggered. Obstacles on the way up. Once we trigger into this, obviously the weekly trading zone, call it a target, call it an obstacle, it's both. Your next obstacle, of course, is going to be the swing high, which is also the all-time historic high right there. For today, the S&P 500 had never traded at that price point. And that's our highest weekly zone on the S&P. Okay. All right, Dow. Last night's alert said to consider being long 27,965. The first move up. The first move up took us to 987. Alexa, 87 minus 65.
87 minus 65 is 22.
Alexa, 22 times 5. I guess that's 110. Never mind. Okay. All right, so $110 per contract move. 2 points in the S&P is the same as 20 points in the Dow. S&P, 1250 per tick. With the Dow, there are no ticks, just points. So 2 points S&P, same dollar-wise as far as profit. Okay, let me get my phone. I got to turn the sound off because we're having a conversation in the Telegram channel, the Breeze channel. We have a number of different channels in Telegram. The one where we go to just shoot the breeze, it's active right now, so that's why I turned my phone off, because it was dinging. But keep the conversation going, guys, and I'll help as I can. One of our partners is looking to get into a new computer, and so if you want to shoot the breeze about any topic or subject, you're welcome. Just reach out, ask for an invitation link. You can send an email to support@cfrn.net. You can call 949-42-EMINI. You can always reach us. Okay? All right. $100 trigger, 110. Okay, then we triggered here. This is the Wall Street opening candle. And we put in a swing high there up at 28,230. Alexa, 28,230 minus 27,965.
This might answer your question. 230 minus 27 is 203.
Not even close. Let's do it a different way. Alexa, 8,230 minus 7,965.
8,230 minus 7,965 is 265. Did that answer your question?
Yes, it did. And now, please, 265 times 5.
Thanks for your feedback.
Alexa, 265 times 5.
265 times 5 is 1,325.
Okay. very difficult to get out at a swing high or a swing low because no one knows it is such a thing until after the fact. These are last week's zones, I believe. I don't think I got these updated. So let's take a quick peek. Partners and passport holders do get the fresh zones every Monday morning, 6:15 a.m. Eastern. We are coming up on our, oh my goodness, Saturday. I've been saying this for so long. We first published the weekly trading zones December 14th of 2009. So I guess tomorrow, Friday the 13th, we'll celebrate a decade of weekly trading zones. Okay? All right, so where's price right now? 28050. The closest zone I have to that would be, okay, I've got 27910. Now, before I move these, here we are, Thursday. These are last week's weekly trading zones. So these zones were published a week ago this past Sunday. So when I say that zones can be very beneficial into the new week, in other words, if you don't have access to the zones Monday morning, then when I make them available like I'm doing right now on a Thursday, if you jot them down, hopefully this shows you how they can be helpful, well into the new week. Okay. All right. So 27910 to 27915. I'm not going to do them all because it's very time consuming, but I'll publish them in the discussion channel later after I've updated all the charts, so that anybody who wants access to them in the audience, you're welcome to them. 27915 and then 28140. So let's just get rid of this one and this one. So 28140, 28145. Okay. Above that's going to be 28260. Slash 265. All right. So on this trigger, the trade to target is always the zone overhead on a long trade, and then on a short alert, of course, it's going to be the zone below. The flip side of the Dow last night, that was and if you did not get a chance to grab a screenshot earlier in the show, there you go. There's 27965, and now I'm looking for 27850. Obviously we haven't triggered that, but did we touch it? Okay. All right. So, and again, the zones went out late last night. They actually early this morning. They came out at 2:40 a.m. And so on this chart, that's the 2:30 candle right there. Okay. So initial trigger on the long side. We did not trigger on the short side. And of course we've triggered. Now we didn't get the third trigger. It just didn't come together. The market tried. It reached down. It just didn't quite do it. Whatever you see between these alerts, we call these our lines in the sand. So whatever market you trade, when the Concierge Trade Alerts are published each evening, go to the chart, to the markets that you trade, and just put 2 lines in the sand. Everything in between the lines I think of as the market making up its mind. And by that, what I mean is in the order flow. And the order flow. And if you want to know the total, just go here, auto sum bid ask, apply. Okay. Now, when I say the market's making up its mind, what that really, in plain English, are there enough buyers in the order flow? Are there more buyers in the order flow than sellers? If so, the market's going to go higher. And if there are more sellers than buyers, price is going to go lower. That's pretty basic. What you'll see with the Concierge Trade Alerts and the Logic Alerts, price will behave much like it does around a weekly trading zone. It will go to it, get the lay of the land, and then make a move accordingly. Okay, so we came down, didn't quite touch it, and then along came the tweet, and off we go. Okay, we better jump back to the ES for just a second, because we got movement. All right, looks like we're going to have a zone-to-zone move here from 57 up to 69. Okay, I can only do so many things at one time. If somebody could put in the chat box what it was that just sent the market higher. Did the president tweet again? Let me look at the chat box. Mike asks, why does your 4-hour gold chart candles look so different than mine? You know, I don't know. I'll bring it up real quick and we'll take a look. Okay, this is where the contract we're trading, G20. Is that the contract that you're on, Mike? And if I back it off to some other time frame and then reload it, maybe there was a glitch in my data. No, my data came back the same way. So without actually seeing your chart, I don't know. Does it still look different? Maybe you need to change your time. Maybe you need to go to a different time frame and then come back to the 4-hour. Sometimes they just hang up. Okay, all right. And of course, you could always call Bert, and he will try to help you figure it out. 866-928-3310. All right, we just made a zone-to-zone move. We talked earlier in the show about this pullback. We sliced through this zone. So this zone failed to be good resistance. That's what we expect when we approach a zone from below. When we slice through like this, once the move runs out of steam, we look for the market to pull back to the zone it sliced through, because now we want to know, okay, you weren't good resistance, will you be good support? And we had 1, 2, 3, 4, 5, 6, we had 3 hours of the market consolidating and confirming that yes, indeed, I will be good support. I failed you as resistance, but you can count on me for some support. So what happens, we run up, we get to the zone, and we expect that to be good resistance until it isn't. Here, we again sliced through this zone. Now, if I were to put this on an hourly chart, let me explain why I did that. I was looking to see if this was going to be one big candle. It's not. Now, most people run day session charts, equity traders. Wall Street opens on the half hour. Globex opens at the top of the hour. Follow me? So now, that brings up a question there, Mike. What, let's see. Are you running day session only charts, or are you running Globex charts? Maybe that's the issue. Okay, Bill just gave me an update here on the spike, and let me share that with you guys. U.S. reaches deal in principle with China, awaits Trump sign-off. U.S. negotiators have terms of phase 1 deal for Trump. Trump's speaking right now. No, I'm sorry. I thought he was. That was just a clip they were showing. Okay, so more China news, and from 57 to 69, 12 S&P points, $50 a point, $600 per contract traded. Okay. And this move would have still been off of this trigger right here. All right, back to the Dow. $1,300 per contract move. Again, very difficult to get out of the swing high or swing low. The trade to target on every alert, concierge or logic, long, zone overhead, short, zone below. Okay, Russell. Tomorrow I'll spend some time going over the indicators with you. I'm just focusing on the alerts right now, but I'll walk you through the way I do tomorrow because we're just short on time today. All right, 1653 /54. I'm just going to put one of them in. The zone is 53.54. Price ran right up to it. It served as good resistance. It's what we anticipate. And then we pulled back. The zone below that is 43.44. So I'm just going to do the 44 side. Again, it's 43.44. Zone below that, 1631/32. I thought that would be easy enough to do. There we go. 1631.32. Zone, the zone, the zone. And the zone below that is 22.23. We have no special guest tomorrow, so we'll have time to really walk through the whole week, all of the moves with the indicators loaded, all of that. Okay. Okay, now back to the Concierge Trade Alerts. On the Russell, consider being long 1638. Okay, 1638. Now the first trigger only took us to 39.10, so that's basically a $50 move. Price pulled back to the zone. It held good support, and then we all know what happened after that. The short side for the Russell was 1631. Is that right? 1631. Yeah. And again, when you see me put out an alert that is on top of a weekly trading zone, then you'll know that I made a mistake. Okay. Alerts are always going to be a minimum of a couple points the other side of a zone. Because when price consolidates at a zone, we know that we get a lot of back and forth, okay? So on the S&P, it'll always be 2 points. On the Dow, it'll typically be 20 either side. So when you see me put out a number like this, now rather than guess at what I actually meant, best thing to do is just shoot me a message in Telegram and go, hey, you just put out a CTA on top of a WTZ. What's the real deal? I'll look at it, I'll fix it, and I'll say thank you very much. Okay? All right. NQ. Okay. All right. On the NQ, 84.64. Oh, come on. 84.64. Okay. Now there's only one more zone overhead, and it's way up at 86.20. So let me just drag this up there. $86.20. Okay. And 84.64, and then 435/36. So there's 36. There's 35. Okay. Below that we have 83.74. /75. Okay. All right. Last night, Concierge alert for the NQ was to consider being long 84.21. 84.21. Go. All right, so the first move took us up to 84.30. That's 9 points, $20 a point. That's $180 per contract traded. Important prices, important areas, almost always tested. So we get back below the trigger, and from 84.20, we make it up to 85, almost 8,500. So we'll call it 84.90. That's 70 NQ points at $20 a point. So that's a $1,400 per contract move. That's from the entry to the swing high. More realistic than trying to catch a swing high. Now, don't get me wrong, you can trail this thing, you can trail right behind price. I'm not saying you have to get out here or you have to get out here. But the zones provide a framework so that you have an idea of, okay, if price can get through this area, it's then a high probability that it'll go to this area. And if it gets through this area, then it's a high probability of going to the next area. Okay, and then when it can't get through, it's just going to reverse and come back, and in this case it's looking for support. Comes all the way back to the trigger, and on this trigger we go up to, let's see, we go from 21 to 46. We're about 25 points, about $500 per contract. And then we get back below the trigger and we do it again. So we had 1, 2, 3, 4 triggers. Okay, 1, 2, 3, 4. This last move for the NQ was zone to zone. S&P went zone to zone. The Dow didn't get a zone. We didn't do a zone to zone move there. And on the Russell, we did do a zone to zone here, but the trigger was a little below. Okay, so 2 of them laid out really. I mean, they all did well. But there's a certain amount of satisfaction as a trader when you have a well-defined framework and it does that. You know. Again, we don't want to think too highly of ourselves. You know, let's stay humble and all that stuff. It's very important. It really is. Not just in trading, but in life. All right. 5885/90 is a current weekly zone. Next zone overheads 5975/5980. So there's almost a zone to zone move there. Okay. The trigger for crude last night, Concierge 5910. 10. All right. So the first move took us up to 5919. That's a $90 per contract move. This trigger took us almost to the zone. So 5910, we call that 60. Crude pays $10 a tick, so it's a $600 per contract move. And these just didn't pull back far enough to trigger. One last market, gold. Okay. Last night we had an alert on gold to be long 1481. That's this line right here. More like that. 1481. Okay. Now the alert went out last night, or early this morning, 2:30 a.m. Eastern. We triggered at 8 a.m. Eastern. Our trade to target was 1491. Why? Because 1491 is a this week weekly trading zone. Okay. And congrats to all CFRN traders that we had a lot of crude traders and a lot of gold traders, and of course S&P. So it was long 81, short 75. Those were the numbers last night. And so from 75, just a quick drop. Well, let me fix these zones. By fixing them, I mean putting them on this week's zones. Under 91, 77/78. Okay. Below that, 71/72. Below that's 58.59. Okay. All right. So we had just one long trigger on gold, but it was a very nice one. And then we triggered once, twice on the short side. From 1475, the trade to target 72. So a $300 per contract move. And then we trigger a second time, and that gave us a $300 per contract move. And gold looks like it wants to get up here and potentially give us a third trigger. Okay. S&P, Dow, Russell, NQ, Crude, and gold. This is it would be wrong for me not to point out that this is why you don't chase trades. Okay, you sit in front of your computer. Now, some people trade news and they trade it very well. I'm not that guy. All right, if you want somebody to teach how to trade news or economic reports, you'll have to find somebody else, because it's not my wheelhouse. Okay, but I can only imagine how many people are sitting there minding their own business, trading, doing their nails, and that news flash came out, the one that Bill just shared with us that I read to you. The market took off like a rocket. They got long, probably as we maybe, if they're watching a 30-minute chart, as we took out these highs, so maybe they got long 84.50 on the NQ, if they're NQ traders. Now, it did run up to 84.64. That's that's a $280 per contract move. But unless you grabbed it pretty quick, I mean, and you know, if you entered here, 84.50, we're down to 35, so it's a $300 per contract drawdown. So nothing crazy, nothing, you know, unrealistic, but it's just why you don't want to chase a trade. Let's look at it on a 1 minute. Okay. So in 2 minutes, this is a 1 minute chart. In 2 minutes, we went from 84, oh, what's the low of this candle? 84.22 to 84.66. So that's an $800 per contract move from the low to the high. And if you were in that move, I mean, if you jumped on it that quick. But see, unfortunately, and I speak from experience, most people didn't get along here. Now, if you're like me, you got along right there. Do you resemble that remark? Yeah, it happens. Okay? And it'll keep happening as long as you keep chasing trades. Now, are there traders who are nimble enough on their feet and with their thoughts and with their mouse to get in here, do business, and get out without any damage? Absolutely. Okay? I'm not that guy. The reason I am so confident about the methodology that I teach, I can sum it up real pretty for you. I am the most mediocre trader you'll ever meet. True story. Okay? I am not the fastest gun in the West, the East, the North, or the South. I do have a luxurious mane, but even that's turning gray. Seriously. You don't have to be a superstar to make money in the markets. You do have to have a definable edge. You do have to have discipline. You have to have patience. You don't have to have our methodology. You could have somebody else's, but you're still going to need an edge and discipline and patience and other things. And that's what CFRN's about. You know, we share with you the tools we've created, the knowledge that we have. We can teach you how to play baseball, but we can't make you a pitcher for the Yankees. If you become a partner or passport holder, along with the strategy, the indicators, etc., we do 2 hours of live training every day, 9:30 a.m. to 11:30 a.m. And we do the live broadcast here where if you're a partner or passport holder, a lot of the stuff that I talk about during the show really makes sense to you, where as somebody just passing through, be like, what? What is he even talking about? So, okay, fair enough. And then Michael and I avail ourselves to you in the afternoons for individual one-on-one mentoring sessions. Okay? So we make a commitment to you. You make a commitment to yourself. If you think, just because we have there's a preponderance of the evidence. I mean, if you just go through and look at the recaps every day that we do on this radio show, and if you follow the Telegram channel for a few days, you follow the Concierge Alerts for a few days, you'll go, man, well, all I need to do is pay those people some money, and I can quit my job. Well, that's just not true. Okay? All the tools in the world and all the strategies and methodologies in the world will not make you a consistently profitable trader. Crystal balls won't make you a consistently profitable trader. A number of things have to come together. I just touched on each one of them, the patience, the discipline, all of that. It's a complete package, and you got to have it all. And if you think that somehow, some way, you're going to find some slick thing out there that will allow you to not have to do the homework and graduate at the top of your class, well, it's a painful journey, okay? It really is. It will cost you time and treasure. If you've been at this for a while and you've not found consistent profitability, then let me ask you a painful question. How much time and treasure have you already spent? Now, let me ask you the really painful question. How much of either one of those do you have left? God bless America. As long as you got your health, you can go out and make some more money. But no one other than God has yet figured out how to whip up another batch of time. It's finite. Now, yes, we are eternal beings. I believe that. But your time here on this earth, those days are numbered. It's right in the good book. Okay? Speaking of the good book, it's time to go to our good word for the day. Let me see if there's any questions in the chat box that I missed. And if you posted a question and it did not get answered, please, by all means, just copy and paste it back into, because we got a huge scroll here, and I'm bound to have missed something. So if you have a question you'd like me to answer it, just please copy paste and I'll do it. Let's see. And the press gets to pick the Fed chair. The press. POTUS. Mike, you're going to have to, I'm missing something on your, I know it's not a question, it's a comment, but I want to understand it. So, Don had said, you never own your house. Your taxes will eventually be more than your original payment. Okay. Okay, and Mike was on a continuous chart. So I'm not on a continuous chart. Mike, let me go back to that gold chart. Let's see if we can get that squared away for you. Okay. So if I go to a, let me switch mine to a continuous, and maybe that'll match up with yours. GG. Okay. Okay, I'm on the continuous contract now. So, does that... Now, you posted another question, Mike. You said, did you mean a gold short trigger? Well, let me go back to the 30-minute chart. Yes, we had, I'm not sure where you asked that question, but last night's Concierge Trade Alerts said to be consider being long here, okay, which was $1,000 per contract trade from the trigger to the target. We went 6 ticks beyond the target. And then on the short side, it was 1475, triggered once, triggered twice, and we're rallying up, and so we may get a third trigger on the short side. Now, did that answer the question, Mike B? It did. Okay, great. Fantastic. Now, it's possible, we don't make it all the way up, but I would hesitate shorting it right here because we're at 1473 and you got that zone right below, which we expect to be good support. It has been for 1, 2, 3, 4, for 5.5 hours now. That zone has served as good support. So I definitely would want to see price, get back above the trigger like it did right there. It got above the trigger by 3 ticks, and then back we go from support to resistance to support. But we haven't got to the resistance again yet. On this move right here, this would have been a $300 per contract move, except it didn't go up quite high enough to trigger. See, we didn't get back above the trigger until this one. So we have 1, 2, and we may get a third one. But you say that your 4-hour chart is still not the same. Okay. I guess you're going to have to check with, I'm not sure if Bert's your broker or not, but you'd need to check with your broker. This is my 4-hour chart. Now that's on the continuous. I need to put that back where it belongs. There. So our 30-minute matches, but the 4-hour doesn't. Yeah. Not sure. Wish I had a better answer for you, but when I don't know, I'll just tell you I don't know. Check with your broker. I'm sure you'll have you square it out. What I will do real quick is I'll pull this up. I'll put gold on that. Now, are you looking at gold or gold? You are looking at a futures chart, right? Because that's, yeah, I'm sure you are. Oh, futures. December contract, 4 hours. Now, I don't have, on this platform, I don't have real-time COMEX data. So, see? Okay. Yeah, check with your broker. He'll help you get it squared away. And I'm going to post all of my charts with the new zones in the discussion group, the public discussion group, later this afternoon. So anybody that you weren't able to copy them down or get a screenshot during the show, you can always go there and grab them. Okie doke. All right. Now, good word for the day. Grabbing my notes. Now, we're going to talk today about integrity. as a believer, as a Christian, as someone who follows Christ, we need to have integrity. What is integrity? The definition I like for integrity, much better than the one you get from Webster. Integrity is what you do when nobody's looking. Proverbs 10:9 says, "Whoever walks in integrity walks securely, but whoever takes crooked paths will be found out." There are those who live with integrity and those who don't. And interestingly enough, they're both rewarded. The first group lives with an abiding sense of God's peace and security. The second group lives with a constant fear of being found out. Ever driven without a valid driver's license? Maybe because it just expired, maybe because you got a warrant, who knows, but if you're as old as I am, there's probably been some point in your life, for some reason, you had to drive for a minute without a license, a valid license, and you're always looking over your shoulder. You spent more time looking in the rearview mirror than you did the windshield. That's no way to live, right? And that's how many people sadly live their life, not looking out at this great, vast, wonderful world that God created. Instead, they're focused on that rearview mirror, because at any minute, somebody or something is going to lower the boom. No way to live. Proverbs 11:3. The integrity of the upright guides them, but the unfaithful are destroyed by their duplicity. A person with integrity is complete and undivided. They adhere to high moral principles in every area of life. Now, does that mean you never fail? No, it doesn't mean that at all. Does it mean, let's take a practical example. We all learned years ago that you're not supposed to litter. Now, I grew up in a generation where when you finished your hamburger, if you're in the car driving, going somewhere, when you finished your burger, you did what every good American did. You threw it out the window, right? Until the commercial came along with the Native American crying by the roadside, single tear. It was a very moving commercial. Now, our parents started to teach us, don't litter, don't litter. Have you ever had something just fall out of your car in more recent times? And man, you don't want to stop, and I'm just grasping for an example here. But man, the guilt's like overwhelming. The world's not going to come to an end if you don't pick up that piece of rubbish that you accidentally dropped. But you stop and you go back and you do it. Why? It's not because the garbage police are going to hunt you down. It's because you have integrity. You know it's wrong. You did it. And you got to fix it. Got to make it right. Am I right? A righteous man may fall 7 times and rise again. That's Proverbs 24:16. It actually goes on to say a little more than that. It says, "For a righteous man may fall 7 times and rise again, but the wicked shall fall by calamity." Everybody falls. Everybody fails. At some point. But people of integrity always get back up. God is patient. He'll work with you on this thing. If he sees you're trying, if you have a broken and contrite spirit, if you're serious, and he knows when you are and when you aren't, he'll help you get it back. If you fall and your integrity slips, but you know that you need to make it right, you need to set it right, God won't, number one, he won't abandon you. Number two, he won't sit there with his arms folded, waiting for you to square it away. No, he'll get right in there with you, shoulder to shoulder. He will help you set that thing straight. Whatever it is, he's not going to pick your garbage up for you. That's your job. Now, this picture that we have of God, the Supreme Being, many faiths, many religions, even denominations inside of Christianity don't recognize a God who is going to get in there, roll up his sleeves, and work with you to help you get your mess straightened out. No, he's a God of judgment and vengeance. Well, vengeance is mine, saith the Lord, but not in that context. If you suffer from a lack of integrity, God can still put your life back together again, but only if you're willing to surrender your will to his. Jacob, before he wrestled with God, was a cheat and a deceiver. I'm not gossiping. That's in Genesis 27:35 through 36. And after he wrestled with the Lord, he walked with a limp. But God would rather have someone who walks with a limp because they've wrestled with their issues and won than someone who's living under false pretenses. God has no time for that. Daniel, a Jewish prince living in captivity, refused to eat non-kosher food because it violated God's law. Joseph was single, far from home, and lonely. But he refused to sleep with the boss's wife. In 1 Corinthians 10:13, Paul says, when you are tempted, he, that being God, will provide a way out so that you can endure it, whatever it is. 1 Corinthians 10:13, again, no temptation has overtaken you except what is common to mankind. Sometimes we think, well, we're the only one. Nobody knows my pain. Yeah, plenty of people know your pain. Some people know you are pain. That's a different story for a different day. No temptation has overtaken you except what is common to mankind. And God is faithful. He will not let you be tempted beyond what you can bear. But when you are tempted, he will also provide a way out so that you can endure it. God always has a way out. His way is the better way. Always. But all of this hinges on one thing. You must be committed to walking in integrity. Again, God always has a way out. And when you're committed to walking in integrity, He'll reveal it to you. He'll show it to you. He will get your attention, whatever it takes. Integrity. It's what you do when nobody else is watching. But there is one who's always watching. Not to judge you, but to help you. Now, I don't want you to read me wrong on this. In fact, we talked about this past Saturday at our men's barbecue. By the way, Real Mini Barbecue. You may have heard this somewhere. We've heard that Jesus is right now before the Father petitioning on our behalf. And one of the men at our church, Eli, he put it in a way that really stuck with me Saturday as we were talking about the things of God. Jesus right now is like your defense attorney. Right? Everybody agree with that? But the day's coming when he's going to take off the suit and tie of the defense attorney. He's going to put on the robe of judgment. Now, the day's coming for every one of us. That is why it is so critically important that you and I learn to live our life in such a way it doesn't matter who's looking or who's watching, because we know in our heart that our actions, our thoughts, our words are pleasing to God. That's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.